Loan mods, loan modifications. Most people are calling them loan mods for short. Find out why the financial pundits nationwide are talking about over 10 million of them happening this year alone. I'm going to show you some examples in just a second, but the biggest single reason why these are all the rage is very simple. Banks have finally realized that they're better off financially by working with homeowners, modifying the existing mortgage, than going through the foreclosure process. It's as simple as that. Here's example one. Started rate on the interest of about 8%, dropped to 6%. That sounds nice. Mortgage payment, $5,200 down to $4,170, but that new payment includes $800 in principal where the old one did not. So bottom line is they are building $1,800. Well, they're saving or building equity to the tune of $1,800 per month, and that $800 every month grows to a larger number, reducing their principal balance. Bottom line, do the math, over $20,000 in either savings, immediate cash savings, or building of equity for their long-term future. Another question that we always get is, what about if I'm upside down, if I owe more than my home is worth? Well, here's one where the starting loan balance is $356. One of our law firms able to successfully negotiate down to $320. Go from $2,100 and change down to $1,270. That's over $850 a month in immediate savings to them, plus almost $36,000 off of their mortgage. And they end up with a 6.5% mortgage for life and a slow amortization getting back there. Again, the reason for this, the banks have finally smelled the coffee, recognizing they're saving thousands and thousands of dollars off, or as opposed to foreclosing, simply working with homeowners. They also don't have to put money into reserves to offset taking those homes back into their inventory. They don't have to resell it, fix a house up. They got better cash flow. And the balance sheet, which is what they borrow money from the Federal Reserve is based on, is better, so they can borrow more money, lend more money, and make more money. You and me, the homeowners. Well, evaluations are free if you use a firm like ours. If they aren't free, you better ask yourself why. Loan modifications don't affect your credit score. The interesting thing is that right this minute, if you have horrible credit because you haven't made your mortgage payments, you can still get a better long-term interest rate than you could if you had perfect credit. Never before in history has this been the case. Stopping the stress of knowing that you've got a payment you can live with, that that payment is going to be fixed and forecastable. Now, a question that we get real often is, well, can I do this myself? The answer is, absolutely you can. The results nationwide are you aren't going to do nearly as good a job as someone that does this for a living, but could you? Absolutely you can. How about past due amounts forgiven, loan balance being reduced? I just showed you some examples of those. Go to Loan Mods R Us if you want to view the 22 most frequently asked questions that we get and hear the answers. Some of them, how do you qualify? What is a loan mod? What about Obama's plan, which is a real good question? What about a hardship letter? Why do you need one? Is this the same as debt consolidation? Why should you use an attorney? Again, these and more are all available at Loan Mods R Us. Not much of an advantage in waiting here. Simply go to Loan Mods R Us, see and decide if a loan modification is something that you want to see if you're eligible for. We, as I mentioned, have a network of 9 law firms nationwide that, if they'll accept you as a client, have a 97% success rate in being able to successfully modify your loan. Cool part of this is they do not charge a dime to evaluate your circumstance. If they accept you, and if they can't do a loan modification, they offer a money-back guarantee. So you've got a choice. You can pick up the phone, call the bank, scream at them, talk to that $8 an hour clerk that barely speaks English, or you can have a law firm call and talk to the vice president in charge of the mortgage department. That's really the bottom line. Attorneys get to the people that make decisions. You and I generally don't. Learn more at Loan Mods R Us. Here's all my contact information. You're welcome to call me, email me, or visit the website, fill out the form, and we'll call you. Thanks so much for your time and may God richly bless you and yours today.